Flow-based budgeting. So new feature that Monarch Money is rolling out. They're changing their budgeting tab. They still have the category-based budgeting, but they're adding in flow-based budgeting, which is just a different way of looking at a budget. And so we're going to break it down a little bit today. So flow-based budgeting goes by a few names. Some people call it one number budgeting, others bucket budgeting. I like flow-based budgeting. Makes sense to me, but we'll talk about why. So it has a 20 to 30-year-old history, depending on who you ask. So it's a rather new way of budgeting. Some sources on the internet are saying like it's the most modern way, but it's not for everyone. So as we go through today, just ask yourself, does this make sense to me? Or am I more comfortable with the categories? So a major difference between flow-based budgeting and category budgeting is that we're budgeting by type and not by category. So by type, I mean, how is the money being spent? There are three categories in a flow-based budget: fixed, flexible, and non-monthly. There's also a fourth goal category, but that's a little separate thing we'll talk about. So the question is, how is the money being spent? Is it being spent in a fixed way, where it's the same every month, a flexible way where it varies month to month, week to week, day to day, or is it a non-monthly where maybe you just pay it once a year, like a vacation? And then this is different from a category type budgeting where you break it down like groceries, vacation, car maintenance, all these categories, and then track each individual category instead of these three types of spending. So this table here breaks down the differences between flow-based budgeting and category budgeting. Their structure, we talked about three broad groups versus specific categories. Flexibility, flow-based budgeting is a more adaptable way to budget. It's less rigid, requires less tracking than the category budgeting. And I'll talk about why. It has to do with rolling over one period of time into the next period of time, whereas the category method, you're locked into one period of time. And so if you have any added expenses, if you go over your budget or under your budget, it's hard to track that into the next period. Complexity is also a difference. Flow-based budgeting has a more simplified approach focusing on the cash flow. Category budgeting is more detailed. It involves complicated categorization, which Monarch Money does its best to alleviate that pain point, which is why I like it. But I'm very happy that they're rolling this flow-based budgeting method out because I believe it simplifies it even further. Hey, Will, thanks for joining.
Hey, Thomas, sorry I'm late.
All good. So yeah, thanks for joining. Just to catch you up, this month is about a flow-based budgeting, which is a new method of budgeting Monarch Money has rolled out. You might have noticed. So here I am just breaking down some differences between flow-based budgeting, category budgeting, which was like the traditional way. So management effort. Flow-based budgeting requires less oversight than the category budgeting method, just because of the time needed to categorize and monitor your category spending versus the flow-based budgeting, which is also, you're basically just tracking one number instead of a list of numbers. And then suitability. Monarch Money will continue to have category budgeting if you feel like that's suitable for you. But for those who category budgeting isn't working for, because of these reasons, the upkeep, rigid nature of it, might enjoy the flow-based budgeting. So we talked about the types of expenses in a flow-based budget. So there are 4 types. Only 3 are currently available in Monarch, but I hear that the 4th type will be coming soon. Fixed expense, which is something auto pay, like I talked about. A flexible expense, which is something that varies month to month, week to week, day to day. And then a non-monthly expense, like a annual or semi-annual payment that's made non-monthly. And then goals. This could be considered non-monthly, which is why it's sort of on the outside. As I said, only 3 are currently available in Monarch. The goal will be around in the next iteration. So fixed expense, it's for non-variable expenses. So anything that's on auto pay, it's a fixed expense. And we'll go over how in Monarch to set this up. A flex expense, it varies, like I said, period to period, month to month, week to week. Like for clothes, for example, your clothes from last month are still good. So you don't need that budget anymore. This accounts for that. With a flex budget, this is the number to really keep an eye on. You can't really do anything about your fixed expenses. You generally need to pay those: utilities, phone, rent, subscriptions. Yeah, those can be taken care of and they'll be part of the fixed budget. But this flex budget is the one where you really keep an eye on it month to month. And that's why this is also called one number budgeting. Currently, Monarch has the ability to track this number monthly. There will be other time periods where you can edit this flex budget to a weekly number. That way you can track it week to week instead of month to month. From everything I've read, the weekly option is the one to work towards, but it's not available now. As I said, in the next iteration, that'll be out. We'll keep our eyes open for that one. Non-monthly expenses, these use a rollover budget. So every month, a little bit is put away towards these expenses. And they're things like property taxes, insurance, any annual subscriptions that you have. Now we'll go into Monarch Money, do a demo. And do you guys see Monarch? Okay. So this is our friend Donnie demo here. We've done his flex budget already. As you can see, his category budget is this first column. And then the second column is his flex budget, which has been auto-filled. But just to walk you through today, we'll do a setup so we confirm that everything is connected. Income looks good. Okay. Flex budget, recommended. Flex, non-monthly, flexible, like we were talking about. Okay. So now this is what we're familiar with, right? All the categories that we had that we were tracking one by one, we can now track in just these three groups. So we have fixed expenses, right? An auto payment, a mortgage, rent, garbage. All these things would normally be put on auto pay to avoid interest payments, for simplicity, anything like that. Postage and shipping, I think that's probably flexible. I've never auto paid postage. Maybe some people do. I don't know. Non-monthly, okay. Home improvement, yep, I can see that. It's only done once or twice a year. Travel, vacation, electronics, sure. Education, okay, yeah, education. Medical, dental, yep. Financial, legal, yep. Auto maintenance, charity, okay. And then flexible, right? So these are the ones that are going to vary pretty widely and that we have the most control over month to month, week to week. Shopping, clothing, miscellaneous, gas, coffee shops, restaurants. Okay, that looks good. So then, does this look right? Okay, so it takes our category of budget. It shows us our previous spending. It gives us last month, gives us the average of the last 6. Okay, so that we can choose which value we think is right. Now, when I did this in my account, these numbers were rather different. So like the monthly average and the last spent, I like to use the average number. If you think that last month was more representative of the future, you might use that. I think this demo account's not going to have any wildly different values there. Okay. And he has a surplus here, $5,000, but this is only in his fixed account. Probably make up for it in the non-monthly and in flex. Charity, right? Every 12 months, we can change this. We can say, I do it on a quarterly basis and it's $500. And then that gives us a monthly budget because every 3 months, we're going to have that money for our charitable expense. And we'll talk about this a little bit later, but then it starts to make sense to have a sinking fund to anticipate that expense in the 3rd month. So this would be the auto deposit that we would make every month in order to hit this in the 3rd month. Gifts, yep, every 12 months. Christmas, right around the corner. I'm sure we're all spending quite a bit on gifts. And yep, wonderful. 12 months. Auto maintenance. I get my oil changed every 3 months. And that's about it. Get the idea here. Financial fees. This is yours truly. I guess it would be variable. No, I guess it would be every month. So in that case, it would be a fixed expense. But anyway, flexible. And then we can go in. These are the ones that we really need to keep an eye on. Tolls. Okay. So we make a decision here, right? What do we want to do? Maybe we split the difference, go to 20, higher than the monthly average, less than what we spent last month. Restaurants, maybe the same thing, but maybe the average is good in that case. Coffee shop, same thing. Big difference here. I might ask myself if I was Donnie Demo, how much do I go to the coffee shop? What's realistic? Okay, $12. And this would be monthly right now. In the next iteration, I hope that this would go to weekly. And then in which case these would all be divided by 4. Shopping, weird that shopping has a negative number, but we're just going to put in 20 for now. It's got so much left. We're just going to put it all in uncategorized. We're still going. So we view the budget here, and then you can see that for this month, we are over. It's giving us a caution here. So in this flexible number, it's saying we budgeted $1,600. We have contributed just over $1,000, and there's 500 remaining. This line right here is how far we are through the month. So that's why it's yellow beyond, saying caution. We've contributed, we've spent $1,000, and it should have been a less. And there's only 500, just over 500 remaining in this month. But the beauty of a flex budget compared to a category budget is that it's flexible. You might go over 1 month and then you realize that and you go under the next month. December is a prime example. We're doing a lot of traveling here. We're spending a lot on gifts, and this month is a higher spend month than other months. So our flexible budget is going to show that. It's going to show us probably going over this month. But if we look in the past, likely we'll have been under budget for a number of months. So let's go back to the slideshow. Let's see what else is. Right. So best practices. How do we use the flex budget most simply, least confusing? How do we remove friction and make this work? So the way I would go about it is to have 3 accounts, 2 checking accounts and 1 savings account. The 2 checking accounts would be for fixed expenses and flexible expenses. And then the savings account would be for those non-monthly expenses. The reason to do this is to build those sinking funds for the non-monthly expenses, like I was talking about. So that way, each month you're saving, you have an auto deposit, and I'll go into how to calculate that. From your paycheck, first of all, goes into the fixed account. And then as you spend in the flex account, you are replenishing from the fixed account. And then from the fixed account as well, you have an auto deposit to the non-monthly. So you're putting the money away into the non-monthly. And then as you spend the fixed account, usually on a weekly basis, you would replenish to the budget that you have set for that fixed account. So I put together this spreadsheet. I think you guys can see this, right? Put together this spreadsheet just to help visualize the sinking fund for non-monthly expenses and for goals. So it's pretty simple. You would just estimate where your expenses are month by month. And I'm sure I don't have all the different non-monthly expenses here. I just some of these off the top of my head. And then you have total cost for each category here, and then total cost for each month here, giving you the total for the year. And then these 2 here are a good estimate of how much monthly needs to be put into the non-monthly account in order to meet these non-monthly expenses. So a good way to start the non-monthly account would be with this total number. So how much are you spending in a year on these non-monthly, and then put that amount into a savings account, high yield, right? Because it's just going to sit there until it's used. And then that's kind of the 0 point. And each month, this monthly cost is contributed into that account. And then that keeps it from being depleted throughout the year. So how is that for you guys? Do you have any questions before we go into the case studies?
Does the savings account, that's for non-monthly expenses you're saying, and then does that also include like large purchases as well?
Yeah. If they're non-monthly. So if they're not something that you do every month, do you have an example in mind?
Right now, not really, but for example's sake, let's say a bicycle, like a nice bicycle. Then
Yeah.
wanted to make, let's say, quarterly investments, like maybe let's say every 3 months, I wanted to put in some money for this bicycle. Maybe it doesn't have to be the same amount every time, but maybe in 2 years, I want a nicer bicycle.
Yeah.
So with that, I would put money into that that high yield savings account.
Yeah, that non-monthly high yield savings account. Yeah.
Right.
You put the money away there, just a cash account. Yield on cash is pretty good right now, but in the future, I'm sure that's going to change. But anyway, yeah. And that might be an example of really a goal that you have, depending on the cost of the bike. Like you can spend a lot of money on a bike. Carbon frame,
Exactly.
you're cutting every gram off of it so you can really zoom around. So yeah, that might be a goal expense, and we'll have to see what Monarch Money puts together for that. But you could put it under an entertainment budget, or just break it down in that spreadsheet and start socking it away.
Okay, for the checking account for monthly expenses, what would you recommend, like a minimum amount of money to hold in that account
Yeah, do you mean fixed expenses or flex
For-
expenses?
for fixed expenses
Yeah, so
and for both?
flex would be that number, and I'll go back to Monarch Money. Flex would be this number here that you've categorized your spending. You've made a pretty good estimate. And so this is the number that you start that account with. And then in this case, each month, at the end of the month, you replenish it to that amount from the fixed account. So that going into the next month, you have that budget again. Now, is it possible to go over? It is, which is why you'd want to build in a buffer. This is why I'm excited for the weekly option here, because then you would be replenishing weekly and have the monthly amount in that. So in this case, maybe 150% of this. So what is that? 2,400 would be reasonable, just to have that buffer there.
Okay.
And then fixed. This will be relatively stable because these are all fixed, right? These are all on auto pay, but also the same thing. I would build in a buffer there. 50% safe if you don't mind holding the cash around.
So I use like one credit card for all of these things. Does it make sense to just have each checking account and kind of pay off the credit card based on each category, would you say?
Yeah. So I would say you would pay the credit card from the from the flex account. So the credit
No.
card's separate and it'll accrue a balance. And then from the flexible account, then you pay it. You would also, if you can, go to weekly with this, and hopefully they will in the next iteration, pay your credit card off weekly.
Okay. And so from this flexible account, is that where everything else goes into then? So if I have a big purchase, I'll just pull the money from that savings account into the flex account, use the flex account to pay the credit card.
If you've anticipated it, it should be in the non-monthly account. And that's a good question. I guess in that case, you would want to transfer the money from the non-monthly account into the flexible account to make the credit card payment.
Okay. And same for the fixed account.
Yeah.
Okay,
Yeah.
I pay my gas bill with my credit card. Let's say, I don't think I actually do, but let's say I do. There's other ones like that. Would I then want to just pull the money from the fixed and go directly to the flex? Or is there any reason that I can't just do multiple credit card payments for the different categories?
Yeah, you could. Yeah. If you want to have one credit card for fixed and one for flex. Is that what you're talking about?
No, I mean the same credit card, but I just pay from different accounts. Like I just have different accounts linked to the credit card. And
Oh,
at
yeah.
the month or at the end of the week, I just pay each category from the account.
Yeah, totally. That would work. You're saying like pay the fixed amount that you've spent to that credit card from the fixed account and then pay the flexible amount
From the flex.
also to that credit. Yeah. Yeah, that'd work. Good questions, guys. Really good. A little case study here. $600 expense. You know you're going to need to pay 4 months from today. So where does it go? Where should we find this money if we're using this budgeting method? It's non-monthly. It's non-monthly because we don't have to pay it until 4 months. This doesn't say, and then never again in the year, but we can assume that it's just one time, 4 months. But also, we don't want to not have that money laying in the account when 4 months comes around and we need to pay $600. And that's why making the monthly transfer into the non-monthly account is pretty key for these non-monthly expenses. Right. The $300 expense that's charged every 6 weeks. This is a tough one, but I wanted to explain it because it's a little bit over monthly. It might be, it sounds like it's a fixed expense, but it's just over that monthly. And so it's going to be like every other month that it's going to be charged. The way to do this would be to average it. So you'd have 6 weeks, $250 every month. And then that budget would, if it's not spent in that month, it would roll over to the next month. And then you'd have $500 for the next month, spend 300, right? 2 goes into the next month, get another 250, and then you have 450, right? 300, 150, right? So it rolls. And that's a big difference in this type of budgeting. Rolling a budget was always an option through Monarch Money, but it's not something that I ever really focused on because there was so much upkeep to the category style of budgeting that I decided it was best not to get too deep into the weeds and really focus on other things that would bring more value. So is flow-based budgeting right for you? So it's up to everyone to decide what budgeting philosophy they would like to try. This one, we've gone over the advantages, disadvantages, what sets it apart. I like it because it's a lot less overhead, even compared to category-based budgeting through Monarch. Monarch automates so much of it. But with this method, instead of tracking each category by itself, those categories are lumped together and in a way that also allows for flexibility month to month, which is very natural. So this is the way that I'll be going with my budget. And I'll keep you guys tuned on how it goes. If you have any other questions about this, we can talk about this. And then I'll shut off the recording and we'll go into an office hours where you can just ask any other questions you have.
Okay. So in this type of budgeting, let's see, would you suggest, this might be a dumb question, if everything will come out of, so you're suggesting just one checking account and one savings account, like long-term savings account, or not just long-term savings account, but the savings account would be specifically for non-monthly expenses, right?
Yes. Yeah, correct.
So there would just be one checking account and one savings account, and that's it?
So 2 checking accounts.
Okay.
And 1 savings account. Yeah.
Okay.
So each category gets its own account. So you have a fixed account, and that's where your paycheck goes. That's also where your rent comes out, your phone bill comes out. A lot of these fixed expenses use ACH, right? That's been my experience. To Will's point, you're not able to use a credit card for all of these fixed expenses. And then you have a flexible account, right? And that's the one that you really keep your eyes on. That's where you have all the control. That's the one that you'll need to be replenishing periodically. And that's also where, to Will's point again, the credit card's paid. And then non-monthly. This is a high yield savings account. It can also include your emergency fund. It would just be in addition to that. So emergency fund, 3 to 6 months of expenses, all the way out to a year if you need to. And then plus the non-monthly expenses, separate that out. Or you could have 2 savings accounts, right? And then just emergency fund to the side, non-monthly for working capital, and then do it like that. That would be fine. It would just be, yeah, go ahead.
I don't understand the savings account, the difference between that and then the second checking account. I'm trying to, like, what's the savings account for?
Yes. So the savings account is for the non-monthly expenses.
Okay. And the flexible is for monthly expenses?
Monthly, weekly. Yeah.
Okay.
Really, I think of it as weekly.
Okay. And when you say flexible, these expenses could vary, you're saying?
Exactly. Like groceries, right?
Groceries. Okay. Or gas bill.
Gas for the car.
Or utilities at home. That can vary.
Utilities.
Okay.
Clothes, right? But yeah, any kind of memberships would be fixed. It really allows you to visualize what your necessary fixed, well, maybe they're not all necessary, but your fixed expenses that you're paying monthly, and separates it from those expenses that do vary so much and just simplifies it. So instead of having all of these categories to track, you only have these 3 categories versus types. So I've also noticed that I have this category budget set up in Monarch Money. And recently I got an email saying, you've gone over your shopping budget by whatever. And it's because I'm buying Christmas presents. Of course I did. But it also said you have however much remaining in your flexible budget. And I thought that was cool, where it's keeping me saying, hey, you've gone over your shopping. You still have some available in your flexible spending account.
Interesting.
Yeah.
So could you have like gift giving in your flexible? So rather than you spent the gifts you got were at like the grocery store or HEB or whatever, and then Monarch detected that as a fixed expense in a way. But how would you have that rather than it deduct from your fixed grocery budget and count against that? How would you get it to show up in your flexible and deduct from your
Yeah. So I'd put the grocery budget in as flexible because I spend quite a bit one week and then next week I don't spend so much. So I put it as, and it's never the same 2 months in a row. It's always variable, right? Flexible. But to your point, if transactions are miscategorized, you can just go in and label them transaction by transaction again. And then how we set this up in the budget, I'll just go through it again quickly. Okay, right here. So all of the categories we would here are groceries and flexible, right? But so maybe it's something else, right? You can always move the categories between these three types.
This is interesting.
Yeah.
I think you could definitely take like your monthly subscription fees that are fixed and then just completely separate those out and for simplicity purposes. And yeah.
Yeah, I think it's really best for those who don't overspend on their budget generally and have built the discipline to keep themselves within these category guards normally, without thinking about it. This then categorizing by type helps alleviate the burden of tracking these. But if you're someone who has trouble staying within these guards, it's best to keep tracking these categories. Really, really focus in on where that spending is occurring and if it aligns up with your values. Cool, guys. Will, anything else?
I don't think so. I'm just trying to set mine up right now.
Cool, guys. Yeah, I just wanted to show this to you. I was very excited by it. This is something that I've had on my radar for a while and thought that Monarch was going to build it in. And I'm very glad that they did. I think they've done it in a good way. The only thing that I'm looking forward to is when this flexible budget becomes weekly instead of monthly. I think that will make it a lot more useful. I think as a monthly number, it's good, but it's too large, right? I really need to be tracking this weekly. A week is like a digestible chunk of time. A month is like, I don't know where I'm going to be 2 weeks from now. Like I can't start thinking about that. But yeah, so I look forward to that.